Hi, my name is Edward. I'm a financial advisor at a well-known company that's been around since 1918. Now, this insurance company can offer you different platforms and plans that can help you to plan for the reality events that may occur in one's lifetime. Now, the reason for this video is I'm going to do a short presentation on this whiteboard behind me to explain to you different platforms that we can help you to plan for that reality events. Now, I'm going to start off drawing a picture. We all know that a house has got a foundation. Then you build your house. And you put a fence around it. The fence we usually use to keep the burglars out of your property so that nobody can enter and steal anything. But with a foundation, I like to call it an income protector. Is to protect your monthly income, salary, that is still needed to pay for water and electricity and any groceries that needs to be bought and school fees and whatsoever when you are not able to work anymore and you are temporarily disabled or sick or lying in hospital or whatsoever, not earning any income. The house I'd like to divide up into two sections, which can be lump sums that will be paid out in any event that can be claimed for disability. Disability is used for a lump sum that's paid out. Let's say, for example, you are stuck to a wheelchair in an accident or whatsoever, can't work anymore, then a normal wheelchair can't always fit through a normal door. So, and there's ramps needs to be built and whatsoever. So there's renovations that needs to be done on the house with a lump sum on a disability. That's why you need a lump sum for disability. When you come to dread disease lump sum payouts is to use for any medical expenditures that may occur, and sometimes you need some medical equipment inside your house to sustain that medical treatment. The roof of the house I'd always like to explain as a retirement annuity when you go on pension. Because if you stay in the same house when you go on pension, everything underneath the roof, there's still water and electricity needs to be paid, still groceries needs to be bought and whatsoever. So there's still some expenses needs to go on when you're still on pension, and that pension needs to be enough to sustain the same lifestyle you had before when on pension. When we look at the fence around this house, I always like to explain it as the life insurance. Now I'm going to wipe this away and explain to you why life insurance at death is so important. In the event that you should pass on, everybody's got an estate. Now this circle isn't the fence anymore, it's just an example of the estate. Let's say you've got a house on your name and you have got some bucks saved up in a bank account, and you've got a vehicle. Let's say, for instance, the vehicle is worth 100,000. You've got 50,000 saved up into a bank account, and your house is worth, let's say, 850. If I add this all together, if you should pass on, your estate will be worth 1 million. Now in the event that you should pass on and you're not there anymore, there's still taxes payable on your estate and also executors fees. Now, we don't know what the tax implication will be at that stage, but I like to explain it as 14% because everybody knows 14% VAT, everybody pays VAT. So 14% on 1 million is 140,000. that SARS would want in the event that you should pass on. Now, if there isn't any cash available inside your estate, what they're going to do? They're going to look in your bank account. No, there's not other than 40,000 there. On your car? No, it's not other than 40,000. Your house? The only place they can take 140,000 is on your house. They will auction up your house, sell your house to the highest bidder whatsoever, so that they can be paid their 140,000 tax that needs to be paid. Then also there's 4% of executors fees. 4% of 1 million gives you 40,000. So 40,000 also needs to be paid for them to settle your estate, so that everything can be handled off. So the same as if there's no money available into the estate, they will see what they can sell to find the money to pay for all the expenses needs going on your estate. But still there's creditors, cell phone contracts, clothing stores, whatever you still need, credit cards, personal loans, whatsoever, they all want their money back. So that's the reason for life insurance. That's why it's so important, so that you have enough money available to pay for this unforeseen expenses that needs to go on. Because if example, let's say you're a husband and a wife and kids, and you're staying in a house, and the house is being sold off, where are your wife or the husband and the kids going? They will have to go live with the parents, or need to move out and go and rent and whatsoever, and they won't have the money to buy another house again. So for them to stay in the same house, to enjoy the same lifestyle that they had, that's why life insurance is so important, to help them to stay there. Now, I'm from South Africa, and I don't know how it works in overseas countries, but if you are living in South Africa and you need more information on this, or a deeper insight into it, see how we can help you, there's a website that you can go to with a contact form. Just fill in your details, and one of the advisors will contact you as soon as possible. Now, if you are living in South Africa and it's in the Vaal Triangle area, I will be most probably the one contact you to come and visit and see what you need. So the website you can go to is www.lifeadvice.co.za. This is a website that I registered just to protect the company's name. With the contact form, just a landing page so that I can capture all the information, and the information will be sent out, doesn't matter where you live in South Africa, to an advisor that's the nearest to you. So for me, thank you, Edward Swanepoel. Like to see you again. Thanks. Bye bye.